given it's the best performing asset last 3 years, last 5 years, last 10 years, since inception, 14 years. So if I'm an investor or I'm a fiduciary of investors as an RIA, I might have to put some percentage in Bitcoin if everyone else is doing it. So at that point, what if it's 1%? Now we're talking 300 billion on 100 billion of free float. That's a big move. Big, like huge.
Hey guys, welcome back to Everyday Finance. In this video, Mark Yusko discuss about Bitcoin. Mark Yusko says, there are a lot of people who will never give up their Bitcoin, either because they can't relocate the Satoshi wallet, it looks like it was a multi-sig, or because they simply don't want to sell. You may be aware that Dan held the network's free float is quite small, and everyone says, well, you know it's $30 trillion market that is advisors that use ETFs all right. Let's say they do 0.1%. That's not that much. That's not going to move the price of a, $500 billion asset. It's not a $500 billion asset. I love his last name, right? He's not going to part with his Bitcoin no matter what the price is, so he's just not going to sell. Perhaps the price will increase by 30 billion out of 100 billion, but not by 0.1%. What if everyone invested 1%? That wouldn't be at all absurd considering that Bitcoin has been the best performing asset over the last 3, 5, and 10 years since its inception. As an investor or fiduciary of investors, I might be required to invest a portion of my portfolio in Bitcoin if everyone else is. At that point, we're talking about 300 billion to 100 billion in free float, which is a huge move. I know you've argued that it's riskier to have no exposure to Bitcoin than to have exposure to it, but nevertheless, that's a big, huge move. And lots of things Mark Yusko discuss, so please watch the video to end and like, share, subscribe our channel Everyday Finance. Thanks.
And people are like, no, that's silly. Well, no, look, there's a limited supply. And the supply isn't just limited by Satoshi himself, right? To 21 million, which isn't 21 million because it's less because there's lost and stolen, but it's not that limited supply. It's the fact that there's so many people who will never part with their Bitcoin, either because they can't, the Satoshi wallet can't move because it appears it was a multi-sig and at least one of the people has passed away, or people just don't want to sell. Dan held, I love his last name, right? He's not going to part with his Bitcoin, no matter what the price is. So he's just not going to sell. So the free float of the network is really small. And so everybody says, well, it's $30 trillion market that is advisors that use ETFs. All right, let's say they do 0.1%, $30 billion. That's not that much. That's not going to move the price of a, $500 billion asset. It's not a $500 billion asset, a free float. Free floats, maybe 100 billion, maybe. So 30 billion on 100 billion, price is going to go up. But it might not be 0.1%. What if everybody did 1%, which isn't even outlandish, given it's the best performing asset last 3 years, last 5 years, last 10 years, since inception, 14 years. So if I'm an investor or I'm a fiduciary of investors as an RIA, I might have to put some percentage in Bitcoin if everyone else is doing it. So at that point, what if it's 1%? Now we're talking 300 billion on 100 billion of free float. That's a big move. Big, like huge. Yeah, look, we had this happen. So we don't have to speculate, Michelle. We've seen this movie before. And history doesn't repeat, but it rhymes. And it wasn't an ETF, but it was GBTC, the trust. So in the last period, 2017-18, GBTC kind of came into existence, and we saw the price go from 10,000 to 60,000 when fair value was more like 20,000. And that was a crazy move, but it was, again, supply and demand. And then it fell, and then it, rebounded back up all the way back to 69. before the bear market, which coincided, by the way, with the approval of the futures-based ETF, which I will argue was absolutely intentional to depress the price ahead of the forecast approval of the spot ETF. Look, here's the thing. Remember the gold ETF? The gold ETF sat waiting for approval for 3 years. Now, why did it take 3 years to approve? It's a great product. Lots of people use it around the world. Why did it take so long to get approved? Well, some would say because JP Morgan didn't want it to be approved. And if JP Morgan doesn't want it to be approved, it's not going to be approved. And so why didn't JP Morgan want it to be approved? Well, and this is not speculation. I'm not making an accusation of anything that hasn't been, documented. And they pled guilty. Actually, they didn't say guilt. They paid a fine without admitting guilt last year for almost $1 billion for spoofing the gold market.
Yeah.
That's fact. That's not fiction. That's not slander. That's just fact. So they are short a whole lot of gold. And once they got short the amount of gold they wanted to be short, they're like, hey, we need someone on the other side. So fine, you can have a gold ETF because they'll be the long to our short. Good, works. I think same thing happened here. There was all this rhetoric about the market's too volatile and too unregulated and too easy to be manipulated. Are you kidding me? How about these triple leveraged VIX ETFs that have lost 99.99999% because they're just silly? They're stupid. They're totally manipulated. They're totally bad for clients. And the SEC let those get approved day and night because they're very profitable for the companies that issue them. That said, there was all this rhetoric that we can't have a Bitcoin spot ETF. Oh, but we can have a futures ETF. Well, what does a futures ETF allow you to do? It allows you to create paper assets. And anytime there's an imbalance of paper assets to physical assets, think oil, think natural gas, think wheat, think anything, you can get these big spikes and big crashes. And that's exactly what happened. So people were able, $1 billion flowed into the futures ETF. Well, for every long, there has to be a short. Well, who would be writing those naked shorts? Maybe the same institutions that now are going to get approved to go long at a lower price. Such an excellent point. Such an excellent point. It's a really, really good point. And I'm hesitating here because it is such a good point that the thing I hadn't thought about, honestly, is the scenario where both sides are so profitable that you don't allow, in essence, the price to move. So you could have the spoofers making a ton of money shorting, and you could have the long ETF spot making tons of fees. They're not making any money because the price doesn't rise, but they don't get paid incentive fees. They get paid fees for assets. So, Michelle, that's actually a really good point. That the only argument I could make against that point is I believe that the wave of spot demand will dwarf the capacity of the Bitcoin futures market at this point. Doesn't mean the Bitcoin futures market couldn't grow like the gold futures market or the oil futures market. But again, I think your point's really, really well taken.